Hello and welcome to another episode of FinTech Focus TV with me, Toby Babb. And today it is one of my favourites. This is the annual meeting with Mr. Mark Beeston from Illuminate Financial. Mark, how are you?
I'm fantastic. Great to see you again, Toby.
Likewise. I think I said to you beforehand that you are now fast approaching, if not the most aired person on FinTech Focus TV. So thank you and congratulations for both of those, depending on which way you look at it. And
It's the number of times it's the number of times you've got to get me back to get me to actually get it right for once, right?
Well, there's always hope. There's always hope. But out in Manhattan at the moment, right? And we've seen you all over the world at various different phases. I know that every time I speak to you, you're in a different glamorous location. But it sounds like everything's going really well, and we've got lots to cover today. So with no further ado, let's start. For the people who haven't watched the 15 episodes we've done beforehand, and particularly this one where we look at what's happened in 24 and moving into 2025. Give us just a brief précis of Mark Beeston and Illuminate Financial.
Sure. Well, let's start with Illuminate. Illuminate is a venture capital firm that I founded 10 years ago. We are a purely enterprise financial services technology focused VC, typically investing at Series A and late seed stages, although Series B, as we'll talk about, is becoming a thing. We are on the ground, partner-led out of London, which is our HQ, New York and Singapore, operating from 3 ventures funds. And we set the business up from day one to be very much partnered with the industry. We were very fortunate to have 9 industry strategics in Fund 3, Ventures 3. All of our funds have been anchored by S&P Global and Deutsche Börse, and we have a roster of banks and other industry strategics in there, which is very much our model, right? We want to listen to the industry and understand the challenges that it has, deploy our capital against solutions that solve those challenges. And that sort of core partnership DNA kind of comes from my background, which is 13 years at Deutsche Bank on the fixed income derivative side, where I first got exposed to kind of the consortia side of fintech. Then I went to the entrepreneurial side, set up a post-trade processing platform, which we ultimately sold to Intercontinental Exchange. And then I was at ICAP for 4 years, where I ran their post-trade and information business, including establishing their corporate venture unit within my remit. So that is a quick version.
That brings us up to today. And Illuminate's been this sort of, remind me of it's what, 10-year journey so far, is it around there?
That's right, yes. Yeah.
Yeah, exactly. And what I'm always find remarkable when I look at this and see some of the companies is how many people know about Illuminate Financial, first and foremost. But secondly, just how many people who you guys have invested in have gone on to do some brilliant things. What do you think some of the sort of core reasoning for that is? I know you've always spoken about sort of going into the right sort of areas, and you've been very strategic about the sort of industry sectors within the space that you've moved into, but it gets it wrong so much, so much more than it gets it wrong, and that's a pretty special position to be in.
So look, better lucky than smart is the old trading adage. Look, I think what we've done here is we've tried to create a model that takes the lessons of the various vantage points that my career has kind of given us, right? And there's there's a huge amount of money spent in financial services technology, more than any other sector, bar the technology sector itself. So the wallet share is there. It's just hard to penetrate, right? But the lifetime values are high once you can get in. And so Illuminate's model the whole way along has not been the West Coast venture model of kind of throwing spears over the horizon and hoping to hit a cold running quantum computer, but really one of, as I say, industry partnership and just understanding what is the industry ready to solve now. The model kind of has fed on itself, right? We went from, as an example, 4 industry strategics in Ventures 2 to 9 industry strategics in Ventures 3. That's just the formal side of our relationship, but that network kind of gets ever larger and stronger. And I sort of think of it as really being the mesh of the net gets smaller, right? Which means you can kind of capture more understanding of opportunities, but you can also connect people better as well, right? And it's kind of been borne out where we're getting, into the sort of closing or the final stages of Fund One. For Fund One, for 3 years now, has been Cambridge Associates' number one 2015 vintage European venture fund for distributions. And again, I think that feeds on the network understanding of what to invest in, but also the network of connectivity for exits, right? One of the challenges that the market's had over the last couple of years has been this sort of IPO locked up market. Sounds like a very 2023 or 2024 thing to say, but I was saying this 10 years ago. The Illuminate model doesn't depend on an IPO market. I've always said we may never ring the bell, but we've sold businesses to Bloomberg, PayPal, Fitch, S&P, Informatica, Trading Technologies, and others, because we're not just buying lottery tickets. We're really kind of hooked into what does the industry need, and so those companies are many times going on to be the kernel of next generation infrastructure at very established infrastructure providers, right? And that's really exciting.
Yeah, definitely. And I think you said something really interesting there, and I've always been sort of two of the things I've always enjoyed about our conversations is one, there's always a sort of quote that I can roll out, going back to, if you remember the paper you wrote during COVID, where it was the petrol on the bonfire of cloud adoption, I think is what you used, and there's been many more that I've enjoyed over the years from it. But also, it's been looking at what's, where the trends are and where your investment goes into. And I know that sort of, when we were talking about Venture 3 last, you mentioned, ESG, you mentioned cloud still around, that sort of thing. You've talked about the sort of perfect storm of technological advancement, which is another one of those quotable areas around it. Yeah. Digital assets you spoke, and I think if you look at 2 and 3, you've sort of stuck to that sort of principle around those sort of areas, haven't you? Is that do you still see those as very much the sort of areas of interest, or moving further forward now as you sort of map further forward? What are the areas you think are really interesting right now?
Yeah, so look, I mean, everybody's talking about AI. We've made it like 7 minutes in, I think, without anything. Maybe
it's probably is the longest we've gone this year without an AI in FinTech Focus TV. So well done for that.
Yeah, so let's not talk about that for a second, right? Like the evolution for us, and again, this kind of comes back to like what works, right? We've always been investment thesis driven, right? And so, the thesis around establishing the firm, as you know, was that generational refresh of capital markets infrastructure. That then kind of grew to, actually, it's not just capital markets infrastructure, it's the whole of enterprise financial services infrastructure. Then we had the institutionalization of digital assets, as you mentioned, the ESG, which obviously includes the very important carbon agenda. I think private markets, private credit, have become really, really important sort of macro level theses for us to kind of drill into. Embedded finance is another one. Wealth and the wealth transition in particular, we know that's coming, or is well underway. Unlike some of these other areas where we like situations where there's regulatory driver. We all know that regulations get changed. We've just gone through an election. Who knows what regulations are going to get changed?
Both
and
sides.
then yes, exactly. And then we've always had that sleeve of enterprise tech that's targeting the sector. And historically that's included things like differential data privacy or confidential computing or et cetera, and AI is just, it's just another, important sort of broad technology that will, end up servicing this space. Although, I think it has its own challenges in terms of, where it can be adopted, where it can't be within, highly regulated mission critical financial services.
Well, it's similar to digital assets in that space, isn't it? And a lot of the conversations I've been having is that on both of those two subjects is about building trust in the whole concept, particularly around the capital markets infrastructure space, where you're talking about those sort of things being, and regulation coming back into it. If we can get the narrative and the trust right in both of those areas, you see a whole nother level increase within it. But
yes and no. I'm gonna go in a slightly different direction. Because I do think the two things are very, very different. I mean, so firstly there's blockchain, and then there's digital assets, and then there's AI, right? So like undoubtedly, one of the reasons that Fund One's returns are so strong is because we didn't do any blockchain deals in that fund when it was all massively hyped and massively valued compared to other capital markets technologies, right? That has served us well. That served us well there. One of the challenges, of course, of blockchain within capital markets in particular, right, is that a lot of those sort of original pitches were, okay, we need a big bang transition of the entire market onto these rails, right? Now, the reality is that's not how it's happening, right? What's going on in the world of institutional digital assets today is an evolution, right? A changing of the regulation that was already occurring with SAB 121 and the arrival of the Bitcoin ETFs and custody at Bank of New York and various things. Probably, we expect to get catalyzed somewhat under Trump, right? But it's an adoption journey. It's not about a big bang switch of, oh, guess what? All of OTC derivatives are suddenly going to be on blockchain, right? Like that's not happening, right? Right. What is happening is people are starting to use technologies for cross-border payments. They're starting to use technologies for stablecoin adoption or coin-based settlement mechanisms within their own institutions and then out to clients. So that evolution is starting, right? AI, I think, is actually super different, right? Because actually, in my mind, it kind of separates out into two areas, right? Firstly, I don't think there's a financial services institution on the planet that actually knows what its current state of AI adoption is, right? And the reason is because there's the formal side, and then there's what individuals can do, right?
Yeah.
So
and what people actually term as AI alongside that as well as another.
Correct, but I mean, this is a silly example, right? Like when we're hiring for our team, right? We're telling people do not use AI to generate your answers, right? And then we're running it through an AI checker, and we're finding that 40% of the applicants are ignoring that and sending us AI generated material, right?
No way. And that's in Illuminate directly.
That's when people are applying for jobs at Illuminate, where in big bold letters we've said we want your own content, not AI driven answers, right?
Absolutely incredible.
So take that as a proxy, right? What is happening with every low, maybe not even low level, but technology literate workforce, employees are undoubtedly using Copilot, ChatGPT, et cetera, as part of their work. It's part of a modern toolkit. It's like a calculator, right? So one of the fundamental differences of AI adoption versus blockchain adoption is that individuals can just adopt it as a workflow enhancement, right? So that's the first part, right? So that becomes a sort of on-ramp into an organization, because as those organizations start to understand actually, our employees may be using it in certain areas, they then have to kind of get governance around that pretty quickly, right? So you'll end up with an onboarding to a certain extent of kind of knowledge workers using it as an enhancement to their knowledge work, right? But then you get to what I kind of define as the regulatory walled garden, right? Like, how can you use black box AI, right? LLMs or whatever it is, right? Inside the highly regulated world of financial services. And the answer is it's really challenging, right? Why is it really challenging? Well, we still live in a world where regulators hate us using spreadsheets, right? End user compute, as they like to call it, right? Why do spreadsheets get used everywhere? We've probably talked about this way back in one of our earlier conversations, right? I'm old enough to remember Lotus 1-2-3. I've kind of ported the derivatives business at Deutsche from 1-2-3 to Microsoft Excel. Why were those? I don't know about that. But why has Microsoft Excel become such a great tool across financial services? It's always been because it can take the prompting, right? I've used the word very carefully, the prompting, the domain understanding that exists in my head to deliver a business outcome, right? I can code Microsoft Excel to value this derivative. I don't need to go to technology, right? a collateral specialist can use Microsoft Excel to do their collateral process. They don't need to go to technology and ask for something, right? AI, there's a sort of journey. So you start with Lotus 1, 2, 3, you go to Microsoft Excel, then you go to low code, right? Low code says, okay, I can now codify this process even though I'm not a coder, right?
Yeah.
And then you go and then you go to AI, right? It's almost like an evolution. What does AI allow me to do? It allows me to take the prompting in my head and turbocharge my output, right? That's fantastic, right? But it's not fantastic in a mission critical, highly regulated, compliance centric environment, right? You need immense amount of governance and security and model control and explainability, etc., around that, right? And so as we look at that space, we've been very, very focused on that component of it. We think it's coming. It's definitely coming because, as I say, the knowledge workers are at the gates using it every day anyway. So, like it's hard to hold back that tide, but what the industry is going to need is very, very strong kind of controls and understanding about how and where it is used. And that's where we're applying our focus.
No, absolutely agree. And I know that's been a focus of what you've been doing around, Venture 3 as well. Your last time you were speaking, it was evolving. Tell us where you are at the moment, and where Illuminate sit right now with Venture 3 and beyond.
Yeah, so Ventures 3 is sort of halfway through deployment in terms of the number of logos it's got in there. So, we anticipated it being sort of 20 to 25 companies. We've got 11 in there at the moment. Worth noting that that's, slightly behind pace in terms of what you would have expected when we launched that fund. I think the first close there was May 2022. We were very slow to kind of start deploying there, and one of the reasons that we were slow to start deploying there was, go back more than 2 years. We were still coming off the tail end of the exuberance of 2020 and 2021. I think we kind of discussed this last time. There's a journey that kind of goes through boards, telling companies, manage your runway. The last people to kind of really kind of realize that the market isn't where the market was, in many cases, is the founders and the CEOs of those companies. And so there's been a long kind of adjustment. So we were being very thoughtful at the start. I'm still thoughtful now, but intentionally holding back and only doing deals that we thought made financial sense for a market that was still normalizing, right? So I think that's definitely served us well.
And that's also been the sort of grand theme of as we were talking before we came on air about the sort of undulating nature of the job market over the last 30 odd years. And you mentioned that the sort of VC market would probably follow a very similar sort of pattern for obvious reasons in hindsight. But you were talking about, I think one of the things that we'll see across any business over the last 18 months to 2 years in particular has been a sort of, cautious play and more discerning play and working at pace. So I think that sort of echoes what you've said there, really, hasn't it? To make the right due diligence in the calls.
I think there's a number of things that you can kind of use to illustrate that. Like pace on Ventures 3 deployment is one index kind of in our business. We're definitely running at a much more normal pace now. The graphic that you kind of showed me earlier that sort of showed, like where recruiting has been definitely on the painful side of normal for a sustained period of time. Probably not, certainly not the depths of the COVID or the GFC lack of activity, but certainly the periodicity of it has been longer than others. And that 100% kind of correlates to what we've seen in venture. Everyone's been talking about, the crypto winter, but make no mistake, there has been a 3-year venture winter as well. The lack of an IPO window means a lack of distributions to LPs, the reset of valuations. It's become harder than ever, I think, to raise funds as well. There's still, as we discussed, there's still plenty of dry powder. There's a lot of dry powder in the system, right? But you have to kind of be able to kind of deploy it at levels that make sense, to you. I think here's a really interesting illustration of just how bad that's been. If you could go back in time to 2018 and grab a copy of Illuminate's prospectus for Ventures 2, right, you would see that we had a plan in there for a Series B focused fund, right? So we had to kind of carve out, because when you launch a fund, you're basically saying to your investors, we're going to focus 100% on this fund. So don't worry, we're not going to raise another Series A focused fund until we've done this one, right? We had an explicit carve out say we want to run this parallel strategy which basically serves the same industry, serves the same theses, and has Series B as an entry point, right? And that was in the docs in 2018 before we did the 2019 February first close of Ventures 2. By the time we'd finished raising Ventures 2, we were in COVID, and valuations had, really kind of started to kind of run away with themselves, right? We have only just done a first close of Early Growth 1, which is that strategy that we were marketing 6 years ago, right? And it's actually really funny because when I sit down with new potential investors, they say, why now? And we're like,
which is a great question.
Well, actually, it wasn't now. I mean, right? It's like the question. It is a great question, but the actual answer isn't. It isn't. It's about now, right? Like the answer was this made total sense in 2018 and 2019, but there was just this period of time where it made no sense at all, right? And so the now part of it is we're kind of back to a much more normal market. I do believe, and I've been saying to anybody that will listen to me for quite some time, it is venture spring. It was hard to kind of share empirical evidence sometimes, but you kind of were getting the mood music. But I can see empirical evidence now.
What does empirical evidence look like for that?
Well, I mean, there's the stuff that I can share and the stuff I can't share, right? Like, we announced 2 weeks ago that Nota Bene, one of our Fund 2 companies in the digital asset space, had done
fantastic.
done a new round led by DRW, right? The fact that a institutional digital asset business is out there raising money, up round, is a sign that we're kind of coming out of the other side of it. I've actually got, if not a handful, then close to it, of other businesses in the portfolio that have term sheets for follow-on financings. Again, all up, that is an exciting return to healthy levels of financing, finding their way back into the market. So it's been a frustrating period to be kind of talking to our investors and saying, I can see this, but I can't share it with you. I'm under NDA or what have you. So to kind of be able to share the first ones is a nice place to be.
Definitely, and that's echoed across numerous people who we've been speaking to. I think that there's definitely been an appetite and more, as you say, empirical evidence that's showing that that there's confidence again in there, and the people who are going out to marketplace I think there was it's been a hard yards to raise funds, hasn't it, over 22, 23, and actually seeing people now who are going through slightly easier processes with more options is a really encouraging sort of sign for things that we were talking about as we move further forward. So
it's actually hard on both sides of the sides of the field, right? It's been it's been brutal for companies, right? Like because the world kind of the swingometer always goes too far, right? So so you went from exuberant, have some money,
I'm a unicorn
across the market, everyone's a unicorn, to much more metrics driven. Growth in many places stalled, and that's a decompounding effect, because if you lower levels of growth in a falling multiples for valuation market, that's pretty challenging for people. But also, as we mentioned a couple of times already, venture as a category is so dependent on IPOs generally, right? That when the IPO market is completely locked up, the venture funds are not returning money to their investors. And if they're not returning their money to their investors are not deploying into new capital, into new funds, which makes it actually harder for funds to for funds to raise. I mean, we've seen multiple venture firms actually return capital to LPs because they've not been able to raise, enough, or including some pretty well-known names sort of shutting up shop. So yeah, it's been a challenging market, I think, on both sides of the fence. We've been very fortunate with the support of our strategics to get our largest ever ventures fund away, as we discussed last time, during one of the toughest periods of the market, and then to get this first close of Early Growth One over the line is just fantastic, and we're very humbled by the support that we get from our strategic partners.
And how much can you tell us about what that looks like?
Nothing at all.
That's for next year's show, right?
The fund.
Yeah.
I mean, I can't because we're actively out there raising the balance at the moment, and there are just some pretty strong rules about that kind of thing. You're the first person externally that I've told that we've done that close. There you go.
I'll take that for now, but you must come on and talk about it a little bit more as well. I want to go back a little bit and rewind to last time we spoke as well. You were anticipating a fair amount of M&A activity, which wasn't quite as prolific as we potentially thought over the course of 2024. But I know you're still very much saying that's coming as we continue to see this sort of winter turn to spring. You're still steadfast that that's where things are heading, right?
See, this is why I do these every year, Toby, so that you can ground me by pointing out where I was not correct.
Most of it's played out, to be fair.
No. I mean, again, as an ex-trader, I know that I'm wrong at least as much as I'm right. The question is where, how much capital you deploy against which opportunities is what really makes the difference. Yeah, I mean, that has definitely been one of the
not right yet, though. That's the answer to this, isn't it?
Well, yeah, you got to be able to stay at the table to get right at the end. That's the challenge. That was a surprise to me. I really thought that we would see more opportunistic M&A as much as anything else, right? We already mentioned, when things swing, it swings too much to the other side. I think that was an incredible window of opportunity for established players, or more established or better capitalized players, to swoop in and make some offers on companies that were perhaps finding it harder to fundraise, or the growth had slowed, and really kind of do some great bolt-on capabilities. And we just haven't seen that, right? And that's not a massive source of regret from my perspective. I mean, it's always nice if you can return LPs more capital, but we're not under any pressure, given the performance of the first fund, which is a nice place to be. And so that kind of then gives you the opportunity to kind of get those companies back on the growth track, which has worked very, very well. And I think we will see interesting opportunities in 2025, but I was wrong about 2024. So let's talk about it in 12 months' time.
Absolutely. Then I know we'll be along the right sort of tracks. So speaking of 25 and getting that crystal ball out, what do you think? We've sort of intimated it all the way through here that we're seeing winter turn to spring. We know the sort of areas that you've been very bullish about so far. Anything else? If you look at the general sort of capital markets fintech arena that we both populate, what would you say some of the things to look out for and that you anticipate coming into the year ahead would look like?
I think we are living in a time of shocking uncertainty. That's the first point, right? So it's a brave person that makes predictions when you look at what's going on in the Ukraine, what's going on in the Middle East, what's going on at the White House. There are just so many macro factors that are exogenous, completely out of our control, right? But all other things being equal, the market has normalized. I think an awful lot of the pain has worked its way out of the system. So we are seeing a return. We're seeing a return to normal sort of follow-on financings. So let's see what happens on the IPO side, because again, whilst, as I say, I don't think it directly impacts us. It definitely impacts mood across the exit space. So that's the big swing factor, and I think we just got to wait and see how sentiment develops amongst all those other factors.
And how will you guys be looking over at Illuminate? What's exciting for the year ahead for you?
I got to get the rest of this fund raised, and then
more to follow.
More to follow. We're at a really interesting place in the evolution of the business, right? More than 10 years in, 2 strategies now, not one, albeit the same strategy, just different entry points. Massively established network, so much more to play for than there ever was, right? We are just under 2 years now from the end date of Fund 1, right? So, the great news is all our investors there have already had way more than their money back, so they're all pretty happy. But we still got 7 positions there. We've got to work out what we do with. You have the option of extending a fund. We can kind of go to our advisory committee and say, hey, we want to extend, twice, actually 1 year at a time. I want to try to avoid that if at all possible. I think the moral contract that VCs have with their investors is to return their capital with returns within that 10-year window. I think there's just far too many people in our industry that kind of just take it for granted that they can just extend, and I don't believe that's the deal that I did when I looked people in the eye, all that time ago. So we've got the roll off of that, and as we're rolling out of that, and as we're completing, the last 10, 11, 12 names that go into Ventures 3. We'll be, as fast as we've done, early growth 1, we'll be kind of bringing Ventures 4 to market as well. So, there's a lot of evolution of the business. The business is definitely much more of a machine than it ever was. We've got some interesting key hires coming in early 2025, and it's exciting.
Certainly sounds it. Mark, I promised you a hard stop so you could get on to your next thing. I know you're a man who's constantly on the go, so I really appreciate you taking the time to come on and share your wisdom as always. It's been another great show to talk to you about. And look, I know I say it every single time, but it's super impressive what you guys have done as a business, and the very fact that you can point to so many success stories over that sort of 10-year period, I think is testament to everything you've been done. And as you say, that network continuing to grow and everything points to a very, very exciting future. So I really appreciate you coming on the show again today. And it sounds like there's going to be quite a lot to talk about next year. So we might have to make it half yearly as opposed to yearly to move that further forward as well and give the people what they want. Mark, it's been an absolute pleasure having you on. Thanks ever so much.
Total pleasure. I do enjoy these annual strategy sessions. They're so useful for me.
I'll put myself on the board. I look forward to it.
Thank you
all
much
for watching. We will see you soon on the next episode of FinTech Focus TV. Thanks a lot.